What a country, right? What a country. Uh, Grew up playing Cowboys and Indians. I remember Geronimo. I always wanted to be Geronimo because I thought he jumped out of an airplane or something. You go, Geronimo. And then you have the Cleveland Indians, changing their names to the Cleveland Guardians, which sounds like a diaper for old people or something. I don't know. What is those? I don't know. That's the first thing that came to my mind. I was like, okay, you sound like you named your team after a diaper. Guardians. Anyway, what do I know? And then the Atlanta paper, they like causing us all to hate each other. So they're like, is it time for the Atlanta Braves to follow suit and change their name? Y'all, why would you be called the Braves if you were disrespecting the Native Americans? We can't even say Indians anymore. I don't think I know I've got Cherokee blood in me. Mama always taught us about we got the Cherokee blood in us, and it's proof because my mama don't have hair that grows on her legs or something. I don't know, strange stuff. So I don't think we're disrespecting Native Americans. I think we're proud of I mean they're yeah. Just a crazy time we live in. So let's change our baseball team names. It's been there forever. I mean, and my gosh, we still don't have a name for the Washington Redskins. I mean, crazy country we live in, but still the best on the planet, in my opinion. Now, I wanted to show y'all this. So, welcome in. We got Ken with us. We got Rick with us. We got Dwayne with us. Dwayne probably cooked salmon yesterday. Stacy's with us. Jim's with us. Jason's with us. Hey, who was it that came up with the thing on Bain? Who posted that?
Oh, that was me.
Jason. How did you do that? I can't wait to take a look at that. So you programmed everything except for the green monster, right? And that's cool. And the linear regression.
Yeah, so pretty much I used Python and I ran Selenium library, which is a botter. So it just botted over TradingView and the browser of Tastyworks, and it pulled out the data.
Jason, you sound like you're from California. You sound like you're a surfer, dude. Where are you from? I mean, you're so relaxed, man.
I am from California. That is correct, but I have not surfed before. Not close
okay.
enough. Just.
How did I pick you out from California, man? I mean, I was sitting there listening to your voice. I go, that dude sounds like a cool Californian sitting out by the beach, with a surfboard.
Yeah, no, it's funny. When I went to school, when people saw me, they also thought I was California because I went to school in New York because I wore tank top and flip flop everywhere. So.
Yeah, that's cool. Well, you sound like a cool dude, and we welcome you to our group. And it looks like you are enjoying it and coming in and doing the programming. So we appreciate when people contribute to our community. So by doing that, I cannot wait to take a look at that. I'm all excited about that.
Yeah, no problem. Happy to help.
So I was at the eye doctor yesterday. Took 3 of my kids there. That was an adventure. And anyway, we're talking about in there, and the little, I guess, eye tech or whatever she was. She was cute as can be. She's about 21 years old, and we were talking about her job and everything. And the ophthalmologist was in there as well. He was very kind. He kind of looked like a Richard Dreyfuss without the beard. And anyway, she was sitting there going, someone told me today, she said that I'm so pretty and that I do such a good job here. And I appreciate y'all saying I did a good job here. Now, we didn't say that she was pretty. I mean, she was pretty, but we didn't say that. And I told her, I said, well, people tell me that all the time, that I'm hot. She just kind of looked at me and laughed. And I told the eye doctor, I said, yeah, a lot of people say, hey, Bob, are you Brad Pitt's brother? And the doctor laughed and he said, listen, if anybody's telling you that, he goes, pass my card to them, please. He's like, because they cannot see good. But anyway, well, good, Jason. Good to have you here. So what I wanted to show y'all today, this, and y'all know what I'm a product of. I'm a product of every trading room that I've ever been a part of. And I spent a lot of time in Theo Trade, and now Theo Trade, all they do is send me email after email after email, want me to sign up for this and sign up for that, and I just can't take it. But I did learn some good things there. And what I learned from Corey Rosenblum is that Here's SPX. Just want you to see this. This is a 5-minute chart, right? But you can see yesterday's close on SPX was at the 50% line of our big green monster. Then you see, so it's around what, 43.68 or so. It closed right at the 50%. Then it opens, what, 43.80 or so. So if you see an opening gap in SPX, that's about, 10 or more, and then you see the gap not fill, so that gap did not fill in the first hour after trading initiated on Friday. So, there's no overnight with SPX. So this is the opening print here. The first hour, it did not close the gap. When you see that, we are to assume that the day is a trend day. Now, as far as market structure goes, about 80 to 90% of days are range days. What's a range day? A range day means this: it goes up and it goes down, it goes up, it goes down. Hey, what'd you say, Rick? Can you hear me? Can everybody hear me? Jason, can you still hear me?
Yep, I can hear you.
Okay, good. I'll mute Rick then. I don't know what Rick was saying. Hey, Matt Jollywally's coming in. Let's see what it says here. Loud and clear, Jim. Okay, thanks, Jim. And let me see. Rick, if you can hear me, mute yourself. We're getting a little bit of feedback. I'm trying to see how do I mute everybody. It's not letting me mute Rick. Anyway, we'll go on with it. So when you see this, we are to assume that this is a trend day. What is a trend day? A trend day does this. Trend day goes up and does a little bit of retracement, and then goes up, a little bit of retracement, and then goes up. So the trend is basically up. And that's what we see here. And one of the good rules of thumb that Corey taught us was that when price comes back to the 20 EMA, that's a good time to go long, right? Because chances are that price is going to pop back up and keep on going. So we have clearly, I think, a trend day. What is a range day? 80 to 90% of days are range days. What are range days? Range days do this: go up and down, up and down, up and down, and they don't really reflect the true range. It looks like today that we clearly have a range day. Now, you'll notice that price is almost coming back to the 20. So let's look at our regular chart. Let's go to volume profile. Shut up, dog. I don't know why we're getting that feedback from Rick, and I don't know how to cut it off. All right, so let's look at SPY, right? So SPY is above the 20, 50, and 200 moving averages. Here is the point of control. Here is the 50% line of our big green monster. Check it out. It's going almost up to the top of the line, and it's experiencing a little bit of a drawback. So we're not surprised by that at all. Let's look at it on the E-minis, see what that looks like. About the same thing, above the 20, 50, and 200 moving averages. It's now above the point of control. It is popping up near we're not near the top, right? But it wouldn't surprise me at all if we, even on this day, on what we're calling a gap up trend day, wouldn't surprise me to see us pop up here and hit something. So, when do you like selling puts? Well, I like selling puts all the time, even on up days. So would I do it now? Yeah, I'll do it now. Even when the market is up so big, right? I'll sell a 10 delta, figuring that we'll go up to here. Now let's see, I closed one yesterday. Let's go to the monitor tab. The micro short puts, I closed one for 52%. Let's see, and I'm looking at anything else. So now we've got on what, 4 of these things. So we don't have a lot of risk, and they're all profitable. Now you remember we got to a point where we had enough on that we were putting one on every day, taking one off, putting one on, taking one off. So I don't think I have to do that since I took one off yesterday. So I think I'm just going to throw out one. Throw out one. Where we're going to go? We're going to go to closest to 60 without going over. Let's go down to about a 10 delta. I use probability of in the money. That is so funny. I hear that. I hear Rick's cat or something strange. 10% right there. It's an 8 delta, but a 10% probability of being in the money. Now, here's what I'm probably going to do. This because I expect that we'll perhaps have a little bit of a pullback. I'm going to try to be greedy. I'm going to try to get $18 for that. So let's see if we can do that. So that'd bring in a credit of $88. Takes no buying power because of all the hedges that I've got on. So let's send that trade and let it work for a while. And if indeed what happens and that comes back down to that, 20 EMA, then we should get filled there. So let's see, we've got a working order for that at 18. Hopefully we'll get a little pullback and we'll get that little bit of extra premium. And then we've got our buying 5 on our Black Swan hedge that, was what, over $5 or $6 just by Monday. Now that's down to $2.80. So we're about $1 away from getting filled on that, which is really, really cool. All right. So we're moving around to a lot of different things, but let's go to our AIM, see if we're getting any triggers for AIM today. And we're not. Good thing is, you remember since I put this back in, on Monday, the 19th, let me go to my allocation tab. Not my allocation tab, my AIM activity tab. So I basically started this count back over with AIM on the 19th and just put in the price of our security since then. And you'll notice those have done really, really well in the AIM portfolio because this little number here tells us that we're up $1,842. So that would be $1,840 since the 19th. So today's the 23rd. So we're looking really, really good there with AIM, but we're having no triggers whatsoever in this particular account. You see what AIM is holding the most of. It's got most in UPRO. Oh, we got field, I think. Boom, we got the pullback. So being greedy was a really good thing. So now let us take our little trade and let's place it in its rightful little spot. So we'll right click that, we'll move it to group, and we'll move it to the micro short puts. Beautiful. So we're having a great day today. We've been green for most of the week, except for Monday. And ever since we went down on Monday, we've done really good. And the cool thing was, remember UMDD had gone down a bunch and AIM told us to buy 5 shares. So what do? We bought 5 shares of that. So how are we doing on UMDD? Says we're down 336, but we're up 47.88 on the day. Oh, that's P&L year to date. Got it. So we're up, down 297 on UMDD, but that's good. Things go down, we buy it. Things go up, we sell it. All right. So let's go to the Analyze tab. Let's just check out our structures here. Hopefully you're getting more and more comfortable on the Analyze tab. And basically what I like to do is show what happens in the event of a crash. Am I going to be wiped out or am I going to be perfectly safe? So if we come in and we wake up on Monday, 20% out of the money, and we have a volatility up, to 62 to 77%, which we would expect on such a big move, then the account would be up, between $7,500 and $28,000. Hope everybody sees those numbers right there. That's what we're looking at. Now it kind of scares you, right? Because here, if volatility is at 17, we're down $37,000 here. Well, with a sudden drop, vol is going to increase. It's not going to stay at 17.01. So let's see what VIX is today. VIX is trading at VIX is trading at 17.34. So see, that's what we kind of are looking at on that analyze tab. What is volatility currently? Well, it's about 17%. And then here's what we would expect it to do in a 20% drop. Now, Bobby, how did you know to make this up to 15%? Well, because if I don't, then volatility is only going to go, to 57%. I mean, to 37%. And then you look here and you go, oh my gosh, best case scenario, I'm down 18,000. So you just kind of get a feel for what volatility does on certain moves. And I've got a feel for volatility. If we had a 20% drop, I firmly believe it would be between 62 and 77% on that drop down. And that's all you're doing is just checking your account. And so the cool thing is that even includes the short puts that I've got on in my account. Now, if we were to get that, sudden drop, I'd probably start peeling those off for losses while the Black Swan hedge would be booming up and doing just fine. Now, I want to just play a little bit today, and I hope I can do this among friends. We're all good folks here, so I just want to play with something. And if you watched Tony from Mexico's segment with Mike and Baby Bat, it was really good. And you can tell that he is dealing in the Black Swan hedge some way as well as we are. Oh, furthermore, let's look at something else. If you don't have the VIX hedge on, today would be a good day to put it on, right? Because it's down, the VIX is down another almost 2%. So with a VIX at 17, if you don't have your VIX hedge on, today would be a great day to do it. How do you do it? You take 0.025% of your account and you buy that in roughly a 10 delta call. So you'd be looking to buy a call here at around, ideally you'd be buying this one, but if your account, if the 285 is more than 0.025% of your account, then you wouldn't buy that one. You probably go out to a point. So on 116, but I don't think I need it with everything that I'm seeing on my analyze tab. I don't need to buy VIX calls today. I think I'm perfectly fine where I am. Okay. But I did want to just try to check in on a trade, just to see if there's something interesting here. I've seen a couple people post about this on SPY, ES, or the micros. I just want to check something out for a second. So if we're trading the ES, here we go. And we're looking to sell one about for $3, right? Let's just look and see what we've got here, where we could possibly sell some options. Let's go to this 84 days to expiration, see what we've got here. You want 50-point wides, right? So, you could sell the 2550 and then at some point replace that by buying the longs at 2500. But I just want to see something for a second. I want to pretend that we're going to sell these 2550s. We're going to sell 3 of them to start a tranche of the Black Swan hedge. Now, I just want to try something, and this may, flop, but I just want to see something because Tony from Mexico really kind of put something in my head about this. So if we're selling 2550, you know, you collect that 390, then you go to your calculator, uh, fix hedges, BSH break even. Here you go. So you would say, I'm gonna sell my shorts for 390. I built you a little calculator. I built you a little calculator, right? So if you did that and you uh, harvest the shorts at 20 cents when you're able to harvest them, and let's say you can buy these at $1.80, then you're still going to make $84 on that trade if you don't get it to crash, right? So that's a pretty nice little trade where you're putting your hedge on for free. So I just want to try something. I'm going to look at something. So we know the game. We sell those three. Shut up, Roxy. Come here, Roxy. Sorry about that. Then we're going to buy these when we can do it for, you know, $1.80, $1.90, depending. You can do $1.50, you can do $1.35, whatever you want to do. But that's generally where you would do that. But I just want to see something else. What if now, if we go from 84 days and let's go to something that's maybe, I don't know, 39 days out? So maybe half. So we'll go from 84 and go to half. And what if you can find, what was that, the 2550? Yeah, 2550 here. So the exact same strike that I sold, what would it look like if I bought 5 of that exact same strike, uh, you know, half the time away? So we're saying at 80 cents. So let me hit the control key. I'm going to hit the buy on that same exact strike. See if it'll pull up the, oh man, it didn't pull up the other one. Hold on, 2550. Let's move that to 5 contracts. And we're just playing here. I have not tried this. I haven't looked at it. I thought we'd all do it together. So let's buy 5 of those. And let's sell 3. Roxy, you are an annoying little dog. This is the dog that, okay, let's sell 3 of these, 2550, same strikes, 84 days out. Now, what's this? This is kind of cool, right? Why would it not let me do the, I figured it would let me do that as a single order, but apparently it won't. Okay, that's fine. Let's just see what we'll get here. Y'all gonna hit, Rick, you're gonna have to help me remember the numbers. So let's say we sell 3 at 390. We're bringing in a credit of 579.54. This is kind of cool. So we're bringing in a credit of 579.54. All right, everybody's with me. Selling 3. All right. Now, what I also want to do is I want to analyze that trade, because we're going to analyze both of these together. So let me go right click, analyze trade. All right. Then we're going to hide positions. And where's that? So we're going to take everything off except for that 390 right there. There she is. All right. Now let's go back to the trade tab. And let's go about half of the distance that we're at now. So we're at 84 days in that expiration. So let's go out to about the 35 day out. And let's, or the 39, 39 days out. And let's buy 5 of these. We're just playing now. Always looking to learn. 2, 3, 4, 5. All right. Let's confirm and send and see what the debit is for that. $209.10. Okay. So we got a credit of $579.54. If we buy these 5, we're going to have a debit of $209.10. So we could put the entire trade on for a credit of $370.44. All right. Now let's analyze this trade. We'll try to analyze these together. All right. Now then, we got a 3 and a 5. Make sure we got everything else that we need. Hold on one second. Check this out. Yep. Check this out. Make sure that's all we got on the board. Yep. Put them back on. All right. Now, I don't have all of my price slices that I normally have because it's putting in the ES, this particular expiration of ES. So what I want to do is take that out and just make this ES. There we go. There we go. I just wanted to see what this one trade all by itself looked like. And so let's see if we got a humongous drop. Let's see, 9-1 there, 721. Let's go to today. Today. I said today. Stupid thing. Let's look at it today. 724. Today, 723. Right there. All right, Rossi, go, but quit barking. All right. So our little whale doesn't look as good there, does it? I was just looking at stuff though, just to kind of see what would happen if you bought longs out. So why don't we try this? Let's try this. That doesn't look good at all. So that 3x5 would have, you'd be down negative 4,000 on a drop. Let's just look at something else. Let's look at something else. What would happen? Now, a couple things that you could do to make it a little bit stronger, right? Is you could say, well, what if we did buy the 2550s? What if we bought something that was closer to the money so that we could still put this on for credit? All right, let's try that. And again, we're just playing. So what if you went up all the way to the 2700? 2700, so that'd be $1.10. So now let's look and see what our little structure looks like. Now that looks much better, doesn't it? I mean, it looks kind of grotesque in this area, but what does it look like here? Well, it looks pretty darn good. Now you're up $3,400 on a drop. So let's just kind of keep playing with this just a little bit. So we said 579. Let's see. Let's move it up a little bit more. And another thing we can do is we could play with the expirations as well, and change the expirations around. But let's just move that strike up a little bit more. If we went to the 2800, so you're getting more power. But what I want you to come away with is, the understanding that you can do anything with these options. So that's much better, right? So now you've got, anywhere on this one particular trade, you've got, 71.92 to 9,200 on a 20% drop. So, and are you still able to put this on for credit? Well, let's see. So we'll do confirm and send. So yeah, we got 579 credit on the shorts. You could get 334 debit on the loans, which would allow you to still put this trade on for an overall credit. Now, it does have negative theta. It's got negative vega on it, and it's got a little bit of positive delta. Now, what happens if you start playing with, let's look at these numbers again. So here you're up 71 to 9,200 on a 20% drop. So what happens if you start playing with the expirations and you go, well, let's move it, I say we start moving it. Let's say end of month, or if you move it here, what happens? That goes down a little bit, doesn't it? So we're moving it in closer expiration. So let's go back out. But there's all kinds of things. And this is when you wake up in the morning, you start thinking about these, you go, oh man, there's all kinds of ways that I can get into a black swan hedge. And the cool thing here is doing something like this is you're able to get into it for a overall credit to where you still have the downside protection in the hedge, but you're doing so that this is an overall credit. So let's just think of this. If we got 579, hold on a second, 579 for this. Let's do that. Confirm us in. I think it was 579 something. 579.54 credit. We're just playing with numbers. 579 in credit minus the debit you'd have to pay for the loans. So you're basically getting, 39 days of protection on those loans. So let's go back and find those. Right click, confirm and send, and 334.10. All right, 334.10. So you're in that trade for 579 minus 334. You got an overall credit of $245. So if you're just getting into the, to the Black Swan hedge, this is one way that you could do it and actually do it as a credit, where you're not, paying out for the, for the hedge. And then at the same time, what you would want to do is buy back your loan in the same expiration, right? Because that's where it's really stronger, 50 points down. So at some point, you want to buy the 2,500. If you sold the 2,550 here, you're going to want to buy the 2,500. Now, what could you do that for and still make it a make this thing a overall credit? So what if we change this to, let's say, $1? And this is so good that we can just do this and kind of play around with this. So let's say if we bought 5 of these at $1. Okay. So that would be $310. Keep in mind the overall trade right now, we've got a credit of $245. So, you would want to go and play with that so that you could still get the overall trade on for credit. So what if you bought these back for, let's start playing with numbers. You bought it back for, let's just work it down in quarters. So 75 cents, 235.92. All right, 235.92. That way you can put the trade on for an overall credit, right? And buy the 39-day loans and this. Now, how long is it going to take you to buy those back for 75 cents? To buy the 2,500s at 75 cents? Well, that's where you got to do and go into some. So that would be in the 84 expiration. Let's just look. Let's go down to the 39 expiration. Just look at the prices of the 2550s. There it is. Between 70 and 80 cents. So I hope you see what I'm saying is by the time the 84 DTE 2550 that is now $3 and something gets down to 39 days, you're going to be able to buy that back for around 75 cents. That's the point where you could put the overall trade in for an overall credit. Now, you're doing that though by buying your protection earlier, right? So what you're doing is going out and buying that 2,800 now for $1.30, so that you have 39 days of protection here. So you're putting it on diagonally, like we talked about in the past, but you're still looking to do this thing so that you can do it for an overall credit. And it may be easier to say, instead of let's buy in the 2,800, let's buy the 2750. You could do that. all different kinds of ways that we can scale into these trades. I wanted you to get your mind thinking today on the possibilities. Hey, wait a minute. I don't want to just sell three to start out. If I sell the three, then I've got that naked risk on the three. So what about if you go about half the time of what you're going to sell? So 84, half of that would be 42. So you go closest to that, 39 days, and you buy an option so that you get immediate protection, right? In the event of a crash, analyze tab, you get immediate protection here, and you are still able to do the whole trade for an overall credit, and you're banking on what is buying the three, the five back in the same expiration, which is now, if you did it, was $3.75. You're going to wait till that option gets down to 75 cents. Well, when's that going to occur? Well, we've seen here it's going to occur if under, all things being equal, it's going to occur at about when the 84 gets down to 39 days expiration. So it's really cool that you can kind of go and compare an options price and what happens from it being 84 days out. You go 2550. What's the 2500 worth here? What's worth 380? What do we think that 2500 would be worth after the passage of 40 something days? Well, we think that that would be worth 85, 75, 80, 80, 85 cents. So I hope you see what I'm doing, right? I'm thinking, I'm playing. I'm saying, what if we go ahead, sell our three, and then you buy one that's closer in days to expiration, right? Closer to expiring. And we do that so that you can buy those cheaper, right? Because those are closer to expiration. You can get these, for a deal, but it still offers you downside protection. And then you can wait 39 days or so, right? Because you've got 39 days with those longs before you buy back the longs in the same expiration as your shorts. So I just want to make sure everybody's thinking about the Black Swan hedge, protecting our portfolios, because we know that the major correction is coming. I mean, it's coming at some point. So in this account, what are we doing? We've got AIM in the account. We've got the Black Swan hedge. We've got some VIX hedges in there, and we're selling some puts, and we've got a few space trip trades in there as well. Any questions or comments on that type of, and I think that's what Tony from Mexico was saying. And he wanted, Mike and Baby Bat to look at, hey, what if you sell the three now, and then you look at buying the five back in a closer expiration and at the same strike as your shorts or even a higher strike until you're able to, get your longs in the same expiration as your shorts. Now, you don't have to overcomplicate it. You don't have to, to do that. But I think it's a really, interesting thing to go, let me play around with, buying some shorter dated longs to protect those short puts that's out there until I can match them up with the, with in the same expiration as my shorts. So the cool thing is, I don't think I have to do that. So if I take these off and I leave the three in there, and we had a big down move like we had on Monday, could my account sustain selling those three totally naked? Well, let's see. Could we? Bueller. Now this looks more grotesque back here, doesn't it? And if we were to, let's see, make sure we got everything on there. 4 vol steps. We got all of our things. So it looks like the account could not take on selling the 3 additional puts. Why? Because we see here, if price goes down to 20% down, then we're down 25,000 to 16,000. Got it? So just a fun little way to look at it. Great little way to look at it.
I had a question.
Yeah.
So for this setup, I know you did 3x5.
Mhm.
And if I'm not mistaken, I think that means like it's the first tranche out of like 4 tranches. How do you know which tranche number to go, whether it's 1 through 4, whether you're maxing at is it 12 by 20 or something?
Yeah, so I hope the day. Now I'm hoping for the day when I'm selling 300 and I'm buying 500. We want to build this wall as large and as big as possible. So that's what we're into with the Black Swan Hedge. We're building a fortress to the downside that's going to profit exponentially when the market drops. So what we did, Jason, is we started out uh, buying 4 tranches. So I started out buying 4 tranches. Let's see if we can show you here. We bought 4 tranches here at a significant debit. Now it's down $860, right? It's down $40 today. Market's going up. We expected this to be a full loser. And guys, I don't remember exactly what I put this trade on for, but I think it was about, I don't know, maybe $1,700 or something for the, I guess we could extrapolate 78%, of whatever, maybe 2,000 or so that I put this on. But what this allowed us to do, Jason, is to enter these other tranches. And this one is now complete, but it wasn't complete when we started. This was just 3 nakeds. And now we own the 3 nakeds and the 5 loans because from this point forward, we're doing the trade so that they're put on for an overall credit, break even or an overall credit. So, this first buying 4 tranches is what allowed us to complete tranche 3, tranche 5, and tranche 4 here, and tranche 1 here. So had it not been for us, buying the 4, then we would not been able to comfortably, sell the 3 on down days and fill these in to where these were all put on for a overall credit. But do you have to buy 4 to start out? No. And Jason, not sure, the size of your portfolio, but we did find that, you can do this in the micros as well. So you can do it in the micros. If you've got a smaller account, you don't have to do it in the ES. But in this one, we're doing it in ES. It's working great. We expect this to be a full loser. But how many days do we have left on this? We've got 39 days on this one. So we still got 39 days of protection on this one before we have to close it out. And then what are you looking for on that one? You're looking at to harvest those shorts. See, we're at 90 right now. So we're going to harvest this. And you can even put a GTC order in if you'd like. Right click. We're going to buy those. Buy single. So we'll buy those 3 when those get down to 20 cents. Oh, 3. Buying 3. So you can say we're buying those when it gets down to 20 cents. That's our harvest. And then instead of day, put GTC and then run that order. So it'll cost us $35 to close those. Now, when do we think that order will get filled? That's the 2,600 put, right? So what you do is you go, how many more days do we think it'll take for that to be filled? And this is the fun part. Do just like we did before. Scroll up, Bob. So let's see. How about 20 days from now? What would those be going for? 2,600 puts will be going for 15 cents. So maybe we could do it before then. So we're at 39 now, 21. Let's look at 21. Let's look at 21. 2,600. There it is. So we're at 39 in 18 days. If nothing changes and we have normal market conditions, you don't have a humongous drop in about 18 days from 39 to 21, we'll be harvesting those for 20 cents. So you kind of got, and when you harvest, what happens to our wall, y'all? Well, man, when you take that out, our wall just, becomes, because you're taking those shorts out. So you no longer have risk in those. So if we can do that and take those out, then we have, what expiration was that? 21 days of protection with those long options with no shorts. It's really cool. Really cool. Yeah. Now keep in mind, you don't want too many GTC orders going, because sometimes these GTC orders, but it's kind of neat to look at, right? If you got a couple of these going, you go, okay, those are 80 cents, that's going to close at 20, and you kind of keep an eye on those. Hey, how many, hold on a second. How many contracts did I have those? Is that where I have the 12? Where's those at? 84, 39. They're at 39, aren't they? Hold on one second. And I may not have my order correct. That's where I had the 4 tranches, wasn't it? 39. 39. Okay, here we go. So I got to buy in, and my position there is not 35. Dang it. 39. My position there is, I have 12 of those. Yeah. So I need to change my order. I'll be buying 12 of those. So we're not buying 3, we're buying 12. Cancel, replace. Let's make that 12. 3. There. 12 to 20. There. So it cost me $141 to buy those 12 back. But man, when you start buying those shorts back and harvesting, it really makes that Black Swan hedge wall really, really strong. Any other questions on this at all? I just thought it was a neat little way of getting into it. Let's see. Dwayne says, I am short. Gosh, these glasses. 3 September 2650 puts for 502.50 at 69 days. Are you suggesting 5 at 2750 puts for $1 at 35? Okay. So, Dwayne, let me ask you this. I mean, do you have any complete Black Swan hedges, or is the only thing that you have are those 3 shorts?
Yeah, that's incomplete. I've got the 3 shorts. I have another one that's complete, but that one I just have the 3 shorts.
Okay, so look at your risk at your risk graph, and if we were to get a a big drop, are you protected? If not, then perhaps yes, go into a closer DTE and buy some loans to give you protection, and then look at it on your analyze tab and see where you would be. So if you've only got 1 tranche and you don't have 4 tranches of the Black Swan hedge, then you may have some risk where you are currently at those 3. Now, depending on where you put those in, let's see, September, 69 days out, 2650. 69 days out. Hey, baby. 69 days out. Let's go look at that. 69. And you were at the 2650.
Bobby?
Yeah.
W.C. Fields said never work with children.
Never work with children? Especially.
They'll upstage you every time.
Oh my gosh, ain't it the truth? Especially with my pretty little red head. This is my little farmer girl here, y'all. She loves the farm animals, frogs, you name it. She's a mess. All right, so you sold those at, no, is that sure? But you can't fill your loans yet, right, for credit. Yeah. So if your analyze tab shows you a little bit of, risk to the downside, it may be good for you to go, about 35 days out and buy something, kind of cheap. So you're to 2650. and then run it on the Analyze tab, right? So I would try to run the same strikes that you sold and, analyze 5 of those in comparison with those 3. Well, I can do that. Hold on a second. Just take a second. 2, 3, 4, 5. All right. So we'll buy 5 there. So let's analyze trade. Analyze trade. And I'm going to hide positions so that we just got our simulation, and then we'll take everything else out. All right, then I'm going to go sell your shorts. Yeah, now let me sell your shorts. You are at 69 days out. Why you being so sweet to daddy, huh? 69 days out. And you said the 2650s. All right, so let me pretend we're selling those. Yep, so let's analyze those. Do you remember what you sold it for? I don't
Yeah, I
think so.
sold it for 335.
335. Okay. Let me change that to 335. Selling 3 of those. All right, so let's analyze that trade. All right. I'm going to change this to ES so I can see all of my ES. All right. Yeah. So, with the 3, if you short the 3, all by itself, you don't have other tranches, then certainly you have, some risk to the downside. It's not, horrible if you buy those 5 a little cheaper. But let's see if we can move our strike a little bit, see what we can do that for. So what if we move this up to about the 2,700? Let's see, or 27. Let's try 2,750. So that would cost you $1. Yeah, 2,750 for $1. Now let's see what we look like on the downside. Oh, much better, right? So now on that small trade of buying those loans 35 days out, you're up $3,100 to $4,500. Okay, so let's keep in mind then what happens. Let's see if my mind will work. So you sold that for $335, and you got a credit, you said, of $502.50. Okay, let's put that in our handy dandy calculator.
That doesn't take into consideration fees and commissions.
Okay, gotcha. So 502.50, and you can use the calculator for that. And the calculator, if you'll put your fees in, it'll automatically do that for you. So if you took in 502.50 as a credit, and now you're going to pay out for those 5, you're going to pay out $259.10 minus $259.10. So you've got what, $243.40 to work with. So then you can buy your loans at a point that it would cost under the $243.40 in the same expiration. And then, take into account the 20 cent harvest cost too. So, $200, $220 that you got to fill those loans in the same expiration. So, but what you're doing, Dwayne, is this is giving you time, right? It's giving you time so that you are not just, blindly naked those 3 puts. Now, you said you've got another tranche in there as well. So make sure that you are running this with not hide positions, but show all. So go through that and do these simulations and run it together and just kind of see where you are if we got that major correction, just to make sure you're positive. Because here's my hope for all of y'all. Get 1 sec, honey. Is I want y'all all to be able to experience that handshaking day when, you know, your account's up really, really big. I hope you all get that. You know, I don't care if you got $1,000 account or a $2 million account. I hope y'all get to experience that. And I think you will if you're putting on these Black Swan hedges in the right way. And so I'm just trying to figure out a safer way for you to do that. And if you can buy some protection on a shorter term, and in the meantime, that means you can wait a little bit on placing your longs in the same expiration as your shorts. Hey, I'm all for that. And Dwayne, if you need any help on that, if we need to, you know, go one-on-one and pull up your account and use the Analyze tab and all that, I'm more than happy to help you with that.
Okay.
Okay. All right, guys. Wow, good session. This week went by really, really fast. And we were down big on Monday, and ever since the market's just gone back up, and we are, you know, doing better than we were when Monday happened. So green is always good. So y'all have a great, great weekend. Jason, you're going to stay around, right? And we're going to work
Yep.
for a little bit with you one-on-one. So everybody else,
Awesome.
I will see y'all on Monday.